Hello and welcome back to goldstocktrades.com. Today we have back here with us Greg Johnson. Greg is CEO of Wellgreen Platinum. Wellgreen Platinum can be traded as WG on the TSX Venture, and it also can be traded as WGPLF on the OTCQX. Thanks, Greg, for being back here with us today.
Great to be back.
Greg, let's talk about the supply and demand fundamentals with platinum group metals, platinum and palladium. We're seeing increased demand possibly coming out of China with some of their requirements to reduce smog. Can you talk to us how crucial the platinum group metals are to China's growing economy?
Yeah, it's really one of the main driving factors for the strong fundamentals in the platinum group metals. If we look back over the last 20, 30 years, we've seen consistent year-on-year growth in both platinum and palladium. That growth has averaged 4 to 5% per year. And interestingly, that's coincided here in the last 5 or 6 years with a fall in supply, particularly out of South Africa and Russia. The main demand area is catalytic converters. Platinum and palladium are fundamental to the technology that's used for gasoline and diesel engines. As everyone knows, in North America, we've had a long history of catalytic converters in our automobiles, but the developing markets like China are just beginning to implement that technology, and it's anticipated here that this year and next we're going to see significant increases in the requirements both within the larger cities but also outside of the major cities. And that could be a huge factor in that giant market, which is already, the Chinese market, I believe, is already as large as the United States market for automobiles. So if they start to implement the same level as European and U.S. standards for automobiles, and I don't think they have any choice with the pollution issues that they have, it could be a substantial increase to the overall consumption of platinum and palladium in those countries and for the world market.
Well, let's focus on the supply concerns. We've seen the the strikes in South Africa, and we're also seeing certain developments in Zimbabwe. Can you talk to us about those two jurisdictions?
Yeah, so Southern Africa is the largest producer of platinum and a very significant producer of palladium as well. And the challenges that they face, particularly in South Africa, are a combination of elements. One of them is the geology of the deposits that they're mining is such that they're relatively narrow mining widths with a few exceptions. Many of these deposits are quite deep, and so it's difficult to mechanize them. And these mines have been developed with a view towards large labor forces operating underground, and aren't really amenable to being mechanized. What that does is that results in a mine that's quite a high cost producer, and if you're seeing periods of labor price increases, it's going to make it even more challenging for those mines to remain viable. Already based on the numbers that were reported by Johnson Matthey last year, it's estimated that 70% of the mines in South Africa do not currently make their all-in cost of production based on their current price structures. And most analysts are expecting energy costs and labor costs to continue to increase, making the pressure on those projects even greater. So we may see some shutdowns just out of straight economics in terms of operations that aren't making money today. But as you mentioned, the news recently has also included the potential for strikes at a number of these operations, which could turn off that production that is economically viable. So it's a very interesting situation that's developing in South Africa. Likewise, in Zimbabwe, the issue there is continued political instability. Recent announcements by the government that private companies need to turn over 50 or 51% of the ownership of their assets, and that they might be required to build a smelter to process those minerals in country. And this has got pretty much universal negative response from the mining companies that are there because of their continued concern about operating in that environment with so much uncertainty. So even though Zimbabwe has such a large resource for the PGM metals, it looks like it's going to be challenging for Zimbabwe to really bring that to market in light of the current political instability there.
Greg, when we first started following the platinum market, platinum was priced cheap. It was cheaper than gold. Now platinum's almost $200 more than gold. Likewise, we just see with Wellgreen Platinum, you were able to close a $1.93 million financing with a second tranche of $660,000. Talk to us about the interest in the platinum group metals versus what's going on in the gold sector now.
Yeah, historically, platinum has traded at a premium to gold. Over the period of the mid '90s, that got to an extreme where we saw the platinum price significantly above the gold price. Recently, it's been below the gold price, and then has crossed over again here back in 2011, and again is starting to trade at a premium, again reflecting its fundamental use in industrial along with its store of value supply characteristics. I think in general what we've seen is because of the deficits in mine production for both platinum and palladium, there has been a greater degree of investor interest in the platinum and palladium metal and in the equities. So there have been a number of high-profile financings announced. Platinum Group Metal announced a $185 million financing just here in the last couple of weeks that they've now closed. I think that in the gold sector, a lot of people are concerned about the continued weakness in gold price. So sentiment has been quite negative for investors in gold, though we are starting to see in general an increase in interest in the sector, perhaps from increased merger and takeover activity, as was announced today by Goldcorp and Cisco. So it appears that the market is stronger for financing for the PGM sector. In general, we may see a greater interest from investors in possible takeovers of large assets that could be of the scale and interest that the producers would want. I think in general, we feel pretty comfortable that the level of interest out there is going to allow Wellgreen Platinum to be able to finance over the next couple of years as we advance the project to feasibility.
Greg, Wellgreen, you've come on to the management team now for a couple of years. At the end of 2013, we saw major restructuring and a name change from Prophecy Platinum to Wellgreen Platinum. Can you talk to us about this transition and how you're headed into 2014?
Yeah, we're pretty excited about the developments. Over the last year that the management team has been in place here at Wellgreen, we've worked through not only the technical aspects of the projects in terms of being able to advance it forward so that there's a clear pathway to feasibility, but we've also focused on restructuring the company. In terms of the shareholder base, we saw a very large block of shares that was held by the former parent company we were spun out of, Prophecy Resource, which is now Prophecy Coal. That 30% block was placed with two of our existing large investors who doubled down on their positions and a new investor. And with that restructuring, it effectively resulted in significant stability to our shareholder base, as well as bringing some new investors in that are long-term in their outlook. That resulted in changes to the board, and as part of that continuing process of demonstrating our focus on the Wellgreen project, and in terms of moving away from the past company in terms of a broader focus, we are now focused in North America at Wellgreen, at Shakespeare. We're trading under the Wellgreen Platinum name, reflecting our focus on our flagship project, and are trading under a new symbol, as you mentioned in the introduction, WG on the Toronto and WGPLF in the U.S. And at this point, it's relatively early days in terms of our institutional ownership. We've got two institutions, Sprott and Drake, that own about 8 and 10%. But really, that's an area that we'll be looking to build in terms of share ownership in institutional names. And I think that's an area that you're going to see the company out introducing the project to well-known industrial and financial names. And I think that because of the unique attributes of our project being located in a politically safe jurisdiction in the Yukon with good infrastructure and the scale and amenability of our project to be open pit mining, this is going to be a project that I think is going to have strong interest for institutional investors.
Greg, let's focus on 2014. At the end of 2013, you were able to intersect 756 meters of PGM nickel copper mineralization at Wellgreen. Talk to us about how you are going to advance the project this year.
Yeah, we're quite excited about some of the technical developments. A big part of our focus on the technical program last year was to take this historic information, which included about 700 drill holes, about 250 kilometers of drilling in the project, go in and take a look at it from a modern open pit mining point of view, and to develop a geologic model that would allow us to predict where we should be able to intercept, wide intervals of ore grade mineralization and potentially be able to expand our understanding of the deposit. In the drill hole that you mentioned, that is one of the best drill holes ever drilled. It's the widest single intercept geologically on the property at 3/4 of a kilometer. That's just an amazing intercept at close to 2 grams equivalent grade. And we're quite excited about that. In addition, there's a higher grade zone, which we've been able to consistently follow in that far eastern zone, which is showing the potential for 25 to 75 meter wide zones that are running closer to 4 to 6 grams per ton platinum equivalent. And we're quite excited about those developments. And part of that information is going to get integrated into our updated preliminary economic assessment, which should be out in the second quarter of this year, in terms of an updated resource where we've gone in and resampled the historic drill core, which was only selectively assayed in the past, with a focus on narrow, high-grade underground mining. And with that resampling effort, sampling all of the rocks that potentially could host our disseminated mineralization, we're quite excited about the potential for optimizing this project, having it be kind of right-sized in terms of capital, focusing on higher-grade material, and because of the benefits of an open-pit mining configuration and perhaps selective high-grade bulk mining as well, we think this is a project that's going to look quite promising in terms of our engineering and economics in this next study.
Greg Johnson, CEO of Wellgreen Platinum, which can be traded as WG on the TSX Venture and as WGPLF on the OTCQX. Thanks so much for being back here with us today.
It's a pleasure, and we look forward to giving you updates again here soon. We are anticipating news on a number of fronts. Final drill results are starting to come in from the lab. We've got samples that are in for metallurgy, and we would expect to see a series of news releases over coming months that may be a good opportunity for us to chat again.